All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday, December 21st, 2022. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. Just a reminder, no YouTube next week. I'll be out on holiday for the Christmas holiday with family. Hope you guys enjoy your family. I'll remind you guys again tomorrow and Friday. But again, no YouTube all next week. Enjoy your holiday. Dow futures up 347 points, NASDAQ up 0.51%, S&P up 0.80%. Meanwhile, the Russell is up nearly 1% this morning. Crude oil is up 2.2% at 77.92 a barrel. Gasoline futures up at $2.26 a gallon, up 1.25%. 10-year Treasury yields are down 3.631% currently. A little bit of talk regarding that. Mortgage applications were down less than expected. Let me go ahead and get that exact number from my Twitter here. I can get this going. Okay, let me get back to it. It just froze on me, TweetDeck. All headlines, of course, are on the Twitter page if you guys are interested in news. Let's see. Mortgage refinance demand rose 6% as rates dropped to its lowest point since September. That was from CNBC. Atlanta Fed's GDP now, Q4 GDP now, forecast is now 2.7%, down from 2.8%. That's the Atlanta GDP. That's a forecast of GDP for Q4. Dollar index 104.04 rising a bit, but again, testing that key trend line we've been talking about forever, 103.76. Let's see if we break it. Volatility index, the last three sessions have been red, and we've been saying that. Very, very interesting. Guys, we have a gap to fill here at 1912. Let's go ahead and put that here on the 1 hour. Maybe we do fill that gap. So keep that in mind. Again, 1914 is support on the VIX. In terms of gold, 1826 up pretty marginally. Silver up down 0.13%. 24.24. Copper futures up 0.20%. Euro dollar is flat, 106.25, but green. 132.41 for dollar yen. That's up 71 pips. Pound dollar is down 47 pips, 121.40. Bitcoin futures, again, 17,000, 16.5, kind of the same level on the future side. 16,795. Very, very muted price action on Bitcoin for the most part, other than big volatile events like a CPI or a Powell, down 0.27%. Ethereum, 1210, up 0.04% on the futures contract. So that's where we are this morning. Let's go ahead and talk about the Dow and a little bit about what happened yesterday. Nike helps boost the Dow, jumps after profits beat estimates. Inventory is coming down. They're cutting prices in terms of excess inventory. So they're up this morning 12.41% on Nike. Awesome job on Nike shareholders. Let's go. Oh, y'all hear anything? Okay, just want to make sure that the sound is on. I checked this morning, so we should be okay. In terms of Nike, again, up 12.5% this morning pre-market. That's helping the Dow. As you can see, the Dow is up 331. Why am I talking about the Dow? A couple of things regarding to the Dow industrial average. That's actually its best. Q4 is actually its best quarter for the Dow since Q2 of 2020. So again, Dow Jones is outperforming. That's forward sign YM if you're trading futures on the Dow. We posted yesterday something interesting that we did finally see. It's the golden cross. This is where the 50 raises above goes above the 200-day. And again, if you are interested in reading a little bit more about it, you can always check out Investopedia. Always a great place to take a look and kind of take a look at some textbook stuff. A golden cross pattern explained with examples and charts. Golden cross is a pattern used in technical analysis, which short-term moving averages rises above the long-term moving average, 50 above the 200. Now you could use the 150, but again, we use the 200 and the 50. So a golden cross is a technical chart pattern indicating a potential major rally. Golden cross appears on a chart when stock's short-term moving average crosses above its long-term moving average. The golden cross can be contrasted with a death cross indicating a bearish price movement. You could see the golden cross here, and we continued a little higher. Again, this is just an example. So what does that mean for the Dow Jones or Dow futures moving forward? Let me go ahead and move this over. All right, so we're now on the daily on the Dow. Again, you can see here that we kind of have a couple of little kind of a double top here, triple top, 35,187. That's pretty much your target here. That could roll over. But again, if you're looking for at least a daily target, it's just to get back to that top end of that wick that we had from Powell post CPI or pre-CPI, because the CPI number before it was reported, S&P 500 and stocks moved higher. That'll get you to around 4178 S&P. So we obviously have more to go. but that's a really, really good sign. For Dow, again, Dow is blended with a little more value companies rather than the S&P 500, which is a little more tech top heavy. So again, extremely important to kind of have things in context. Great having a golden cross, but we have a lot more to go. S&P 500 futures, you get 3,900 is really the level we're looking for. We're right near the 50-day moving average. That could act as resistance today, as we are rejecting it slightly, at least today. But the Dow being up 316 is nice. 10-year yields falling is nice. Would like to see a little more of a flush here in terms of the dollar. If that dollar does flush, then possibly a Santa rally is still in effect. If we talked about Santa rally, obviously ad nauseum, 39.20 be a key Fibonacci level, at least on the short-term basis from the highs of CPI to the lows that we had in October. We did bounce off that 50% retracement with a nice daily hammer candle. Again, I expect us to get to around 3,900, if not reject 38.89 and kind of chop around there for a little bit. And again, in terms of a bull case today, 39.20 would be your 38.2 fib, which is right near the 100-day. I don't know if we'll get that high today, again, just because of volumes are sinking as we get closer to the holiday. Christmas Eve is on Friday, guys. But again, the market is open on Friday. Let me go and take a look at the hours for you. Let's make sure that we have the right hours in terms of the NYSE. Christmas Day, Monday, the market will be closed. So there you go. No market on Monday. Friday, regular time. Remember, we have core PCE numbers at 8:30. We'll go over that number together as well. Let's go and take a look at a couple of names that have been making a lot of noise. Obviously, let's go to Tesla. I tweeted about Tesla yesterday a lot, and it was sinking and sinking and sinking. Obviously, this all has to do with the Twitter stuff. But again, if we just chart it, again, 120, 119.20, that seems 119.80 right there is support. We talked about that 200 weekly MA. It sliced through it. It accelerated lower yesterday. I think it was its worst performing day since October. So again, Tesla under pressure. It is bouncing this morning about $2, less than $2 this morning. But again, I believe Elon Musk did say that he found a new CEO for Twitter. So that's why it's affecting Tesla, because he has to sell Tesla shares in order to prop up his Twitter buy. So that's pretty much why Tesla has been underperforming as of late. We talked about Nike this morning. Nike's trading at 116.11. They had a great earnings report. Gross margins were strong. That's really good, a really good sign. We filled this gap here. We are going to fill this gap. We're now at 116. There is some resistance here at 116.44. That's the wick high. I would wait for that break before you do any kind of action with Nike, because you also have a gap to fill here at 94. Could that fill? Absolutely. But again, you want to keep an eye on that. And again, 116.44, very, very big resistance, very, very key trend line you could see. If we get above the 200-day, that's a really, really great sign. We are now, we should be above that this morning, 116.18, right around this area. But again, that 116.44 to around 118 looms. So again, you can have this as resistance, you can have this as resistance, but again, you're starting to get into that zone. And again, you have 118.53 as a gap to fill. I don't know if I want to fill 118 calls right when we gap up on Nike overnight on the earnings report. I probably skip this name. In terms of buying additional stock, again, you want to go ahead and make sure that you actually break out first and see if you have a new trend of anything else. But what's nice is that you do have a little bit of a inverse head and shoulders setup. So again, a little more upside possibly in effect for Nike. Let's take a look at FedEx. They reported earnings yesterday. They didn't have the best picture in terms of the macro environment, but the stock is still up. I expected them to be down, especially with lessening demand as we're expecting with this Fed tightening. Right now, we're trading at 174.20. You have the 200 MA on the 1 hour. That seems to be rejecting. You also have a small gap to fill, 177.25. I don't expect a lot of volume with this name. With their catalyst already being said, I believe the trade was probably beforehand than anything else. But again, you can see a rejection here on FedEx. If anything, what you're looking at is probably to fade this rally. If you start getting a slice below 3,800 S&P, you would break below 164 Federal Express FedEx, where we are currently, and you could possibly trade that. But right now, I don't think that's probably the best move. The good news on FedEx is that you have a nice gap to fill here, right around 274. Not a terrible trade if you get a little bit of pullback and you hold some key support levels. So again, if we can hold above 164 at least, that 50-day, maybe. I took my target position just for the simple fact that, again, we're expecting a slowdown in terms of retailers. The good news is that FedEx was okay. You have 138.70 as a possible re-enter level there. I got to break even on FedEx. I was green. I added a position. I basically got out flat. But again, we still have that big gap to fill looming. And again, if you don't think gaps do fill, again, they do about 80% of the time. How about Netflix? Pretty clean the way it filled, and you still have another upside gap, 314.87 on the daily. You can see that's up at 288.90. So nice gap here at 317. If we start accelerating a little bit on Netflix, maybe Netflix is worth a shot. You can start taking a look at possibly the 310s for next week. Again, remember, shortened week, but again, we probably want to take advantage of that Santa rally if we get this counter trend. If the VIX start breaking down, yields break down, the dollar breaks down, tons of moving forces. But start adding your watch list because there's put premiums are now elevated because everyone is short, at least at this juncture. So again, you're not going to get a ton of demand for it currently. Calls, again, it's more of a turnaround, more of an inverse play. Again, what you want to do trading that is you want to get out of the money and get out quickly, as quick as you can. So again, just because the volumes are sinking this week and possibly next. Let's answer some questions. Jonathan says, good morning. Thoughts on Disney when it made 52-week low? Not good because I own Disney, obviously. And I still love Disney. And I've been saying this for years, if anyone's been listening to the note. They should spin off ESPN. Finally, Wells Fargo has agreed with me on that. And maybe Bob Iger does spin off ESPN. It is a cash cow, but I think Disney should just focus on what it's great at. As we have seen with the Sunday ticket negotiations with YouTube and Google, sport packages are just getting more expensive. And again, ESPN has all four: NBA, MLB, NBA, and NFL. I think NFL, NHL, MLB, and NFL. So all of them. Or did I miss one? But either way, they have everything. So again, if you look like a difference between like a Fox Sports, which is run by Fox, again they had the World Cup. They don't have NBA action, but they have college basketball, they have college football, and NFL football. So it's very concentrated to one sport. They don't do hockey or anything like that. I think ESPN is just spending too much money on that. If they want to kind of reduce that cash burn, again, the parks may not be the best bet. Yes, margins are higher, but again, that's a cyclical thing that could be pulled away. It's very similar to how, if you've watched the documentary on Blockbusters, a really interesting one on Netflix, they were bought out by a different company. And then what they were doing was taking the late fees of Blockbuster, which was their cash cow, and paying their other businesses. I think that's kind of what Disney is doing with the theme parks. Again, trying to boost up Disney Plus and their streaming. And again, with streaming, we know the valuations have been come down. Just look at Netflix. But again, when you're looking at a Disney, you have to look at it in the prism of that they also have the parks, which are very, very profitable. The problem is that the management has been not the best. So again, they're all into streaming, which is a losing business, and taking money from a profitable business to prop that. So a best analogy would be that if you were married, you're basically working to cover your wife's spending habits. Without her cutting her spending habits at the mall, you can't make more money. It's an example. That's pretty much how I see it. So I would love to see ESPN be spun off. I think it's just a cash drain as more and more live sports get more expensive. Disney's going to have that sunk cost unless they find some other way to offset those costs. I think Disney becomes under pressure, but that would be a great first step, at least, to look for bids for a spinoff of ESPN. They also have golf too. They pretty much have everything. Had to refresh. Thanks. You're welcome. Hey, I don't see the investment club on the new website. How can I only join the investment club? Thank you for telling me. I apologize on that. I will make sure to tell marketing team or the website team to make sure to add that. My apologies on that. It wasn't on there. We were just kind of working out the last couple of kinks. The new website is www.gar.capital. GAR.capital. That's it. There is no .com, which is kind of cool. I'm still getting used to that. But we'll get that website up for you, Alex. Do me a favor. Shoot us a DM on Instagram or shoot us an email, garcapital@gmail.com, and we could send you the link just to get Investment Club. Make life easy for you. You don't have to do any clicks. We'll just get you the link. That'll get you to the page you want to go and get you set up. So again, we talked about Disney. We talked about Disney. We talked about Tesla. We talked about Target as well, slightly. I am in IWM calls with the team. Let's take a look at the 1 hour. You can see here rejecting the 100-day moving average as we're kind of sinking a bit. But in terms of the actual chart, you could see 174.99 being a key level. We do also have a gap to fill at 178.97. Nice little push overnight. If you're part of the Discord team, and you see you're above 40% today in the morning, just go ahead and take it. Again, let's not tempt fate and see where we go from there. We could get accelerated bounce, but again, it's better just to take our money. I do expect us to fill this gap here at 175.65 on IWM. So that's for you guys on the Discord channel. Not much trading this week. All we did was Apple puts on Monday. We traded IWM calls yesterday, and today we'll see what we get. Let's see if we get a little more acceleration here. S&P 500, let's bring up the SPY. Everyone loves SPY. We do have a gap to fill here. Let's take a look at it. I went ahead and put that. You can see there's a gap to fill here at 387.77. We already filled this gap. No more downside gaps on the daily. We got 2 on the upside. So let's see if we can get to the point where we can fill them. And again, the golden cross and the Dow being very, very important. Nike's a part of that index. So again, that's helping out. But let's see what we get towards the end of the day. Let's see if the volume starts pouring in. You could see the last 2 days how depressed volume was in contrast to last week. Again, in terms of futures, the last 4 days were higher than the last 2. The 4 days last week were higher than the last 2. Obviously, we had CPI and we also had Fed Chair Powell. But again, we'll see if we get the volume in to trade a little bit. If not, that's fine. It's okay to just sit on your hands and wait for the nice opportunity. I think that's probably the most prudent thing for everyone to do. The only thing I wish is that Tesla put. I was looking at Tesla puts yesterday, but again, it was so difficult to trade in terms of just trying to see if that was a bottom or not, or if we were going to turn around in the market. And the market was green, yet Tesla was underperforming so badly. Let's see if that does turn around. If anything, we could always target that 200 weekly MA if we're looking for some upside. And if we're looking for some downside, really 120 is your target for the most part on a long-term basis. They're talking about Elon Musk and Tesla right now. Musk blames macro factors and rates in terms of his stock performance. This is on CNBC Live. We'll go and leave it there, guys. Have a great rest of your morning. Thank you again for joining me. As always, I'm very humbled that you joined me in the morning, especially when you guys got stuff to do with work and everything like that. Make sure to hit that like button if you like these videos. Really appreciate it as always. I will catch you guys tomorrow for the morning note, and we'll see where we go from here. We'll see you guys then. Cheers.